Good afternoon, ladies and gentlemen, and welcome to the Argo Blockchain post-AGM investor presentation and Q&A. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position, due to the number of attendees on today's call, to answer every question it receives. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll send you an email to notify you when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll and would be most grateful if you could give that your attention. And I'd now like to hand over to Ian McLeod, Chairman from Argo Blockchain. Good afternoon to you, sir.
Thank you, Mark. Hello, everyone. Welcome, and thank you all for joining us for what is our first virtual Argo Blockchain post-AGM update presentation. Quite a mouthful. As you probably know, the actual AGM was just carried out. In fact, it was several hours ago. It was a closed meeting in accordance with COVID-19 restrictions. So it was a short, formal, and probably a pretty dull meeting, and we're hoping that this will be more informative and more enjoyable for you. Usually an AGM is a great opportunity for the company to connect with its shareholders in person. And although the pandemic restrictions have prevented us from having that meeting in person, we still wanted to use this opportunity to provide you with an update and try as best as we could to connect. Today's presentation will be brought to you by Peter Wall, obviously Argo's CEO, and Alex Appleton, our Director of Finance. And after the presentation, they'll respond to some of the questions that have been posted on our website and potentially some of the same themes that will be posted during the presentation. And now, just before I turn it over to Peter and Alex, I wanted to thank each of you on behalf of Argo's board for your continued support of Argo and your enthusiasm for cryptocurrency. It means a lot to the team to have such passionate and engaged shareholders. So with that intro out of the way, I'll turn it over to Peter and Alex.
Excellent. All right. Thank you, Ian. All right. So we're going to start the presentation. As Ian said, we'll do a formal presentation of about 20 slides, kind of just a quick update on what's happening with the company, and then we'll take some questions that that folks have sent in ahead of time, and I'll just similar actually to the Twitter Q&A questions that come up, and we'll answer those, and then we'll take some of the Q&As that are coming in on this through the platform. So yeah, first, exactly what Ian said. We appreciate all the support from our shareholders, and obviously we have a great shareholder base. Many of you, in the UK, many of you in North America, and hopefully some from other parts of the world as well. And this is our first virtual AGM, so hopefully this is a tradition we can continue. Shareholder engagement, transparency, communications are obviously super important to Argo, and have always been a part of what Ian and myself have tried to do in the last year and a half. So let's start our presentation. A few disclaimers as always, both the UK and the US. There's myself and Alex. Alex, are you on there?
I am on, but unfortunately my download speed is not good enough to support a picture of myself, so you'll just have to deal with my voice alone. Sorry about that, guys.
Sounds good. Okay, well, voice will have to do. So this is a general presentation. We're just going to cover some of the things that have happened over the last little while. Many of you already will know this. This is all things that we've already announced. So here's our Argo-At-A-Glance slide. We have just over 1,000 petahash of Bitcoin mining capacity right now, 280 megasouls of Equihash capacity. Our last announced mining margin was over 80%. So obviously mining margins have been great this year so far. We hold over 1,100 Bitcoin and Bitcoin equivalents in treasury. Our revenue for 2020 was 19 million. Our EBITDA for 2020 was 7.6 million pounds. And in 2020, we mined 2,465 Bitcoin. So 2020 was an interesting year. I'll just do a quick recap of the year because we're still talking about the 2020 results, and even though it seems like eons ago, in crypto years, 1 year in crypto years is 7 years in the real world. So it feels like it was 20 years ago, or it feels like it was 7 years ago, 2020. But it was just last year when Ian and myself took over as CEO and executive chair respectively. We came in the start of 2020 with the goal to really focus on making the company more operationally efficient, being cost efficient with both on the mining side and on the admin side, and also with a focus on scaling our mining infrastructure. And the first iteration of that was the installation of the T17s and S17s. At Core Scientific in the US. Those machines have turned out to be extremely profitable. And then we had, this COVID flash crash in March of 2020, which many of you will remember. I'll never forget that it was a night here when the price of Bitcoin went from 10,000 to 5,000, seemingly in a few minutes. And we weathered that storm, and then right after that became the Bitcoin halving. And those were, margins got tighter, and we had to be really strategic about how we were going to kind of survive through those few months. Many of you were shareholders at the time. Some of you probably weren't, but those of you that weathered that storm with us will remember there was lots of volatility, and one of the things that helped us weather that was that we had some Z11s that were already mining. And then we added some more that summer, so that's the next thing on the Q2 list. We added some more Z11s, which were mining Zcash, and that allowed our Bitcoin mining margins to be, or our overall mining margins to be bolstered, because Bitcoin mining was narrow, margins were much thinner at that time due to the halving and due to the price of Bitcoin. And then, the tide started turning in the second half of 2020. The institutional interest in Bitcoin started growing in a big way, obviously led by Michael Saylor and MicroStrategy. We saw an opportunity to take over the GPU1 facilities in Quebec that we've been mining at for a long time. And we also signed some, which turned out to be great timing. We signed some orders to get more capacity for early 2021, and we did that in late 2020. So overall, in terms of the 2020 results, this is what it looked like. Alex, are you going to do this one, or me, or is it going to be me?
I think that one was with you, and I'll take the financials on the next couple of slides.
All right. So one of the other pieces that we did in 2020 was we instituted what we call the smart growth strategy, and that was really taking a deep look at ROI. Return on investment on any mining machine purchase that we made, trying to project as much as we could, the difficulty rate, the mining difficulty for Bitcoin or for other coins that we were looking at mining, and comparing that against the cost of machines and the price of Bitcoin and our mining, hosting costs, our power costs. So that, trying to get that timing right as much as possible. Has led to good results for us on the ROI side. Our machines have performed really well on in terms of overperforming our projected ROIs, and shown that kind of just growth at any cost is not always as effective as strategic growth, or what we call smart growth. So in terms of what did capacity look like for us in 2020, we went from 210 petahash at the start of the year to 645 petahash at the end of the year, with commitment to another chunk of machines to take us over 1 exahash in early 2021, and expanded our Equihash miners from 180 megasouls to 280 megasouls. The fact that we also had newer generation machines going into the halving made us more resilient. A lot of those older generation machines, obviously the S9s or machines from that cohort, had to come offline at that particular time because they were no longer profitable for a lot of miners. And our overall mining margin for the year was 41%. The second half of the year, mining margins were much better than the middle of the year around the halving, just because things got much tighter around the halving. All right, Mr. Appleton.
Thanks, Peter. Again, apologies for not having the broadband strength to see my face during this presentation, but that might be a good thing anyway. The 2020 was we were really pleased with 2020. Obviously, there was the COVID crash that Peter talked about. There was the halving event where overnight, effectively, the reward for mining each blockchain halves, and our revenue therefore could potentially halve. Fortunately, we'd seen this coming. We'd offset this with mining other cryptocurrencies at the time, and we were able to achieve a very pleasing 41% overall mining margin for the year. Now, we saw a real run on those mining margins towards the end of the year, as if you followed our operational updates, you've seen that they started to reach 50-60% towards the end of the year, and I'll go on to the sort of 85% that they peaked at during 2021. So very pleasing result. EBITDA of 7.6 million. Again, for a capital intensive company, we tend to look at EBITDA, but if I can just jump to the net profit there to actually generate also a large net profit was very pleasing indeed. And the operational processes and controls and hard work that we did to really drive down those admin expenses, they fell from 3.5 million to 2.4 million. So that was a successful drive to really streamline the business, make it agile as possible, and prepare us for the growth that we've seen coming into 2021. So do you want to go on to 2021, Peter? So as at May, in the year to date, we've mined 716 Bitcoin. We hold 1,100 Bitcoin, as we've said on earlier in the presentation, and Bitcoin equivalents, of course. We've had revenue to date of 25.6 million. Now, if you compare that to last year's total revenue for the year, 19 million. Again, we've had a really good start to the year, and that mining margin has been above 80%, so over double what it was last year. So that is, and we've seen the S19s and the S19 Pros that we purchased at the end of the last year, which were installed in February. Those have performed exceedingly well, and as we stand today, we could sell them for a lot more than what we bought them for. And we have not sold any Bitcoin to date. So we've managed to we've raised funds through different means. So we've had some equity raises, which you will no doubt know about. And what that has meant is we've been able to hold our Bitcoin and fund our operating cash flow and capital cash flows using the funds that we've had from them, as well as the other investments, which Peter will go on to talk about. So that's where we started 2021, really, really well, as most Bitcoin miners have, but we're looking forward to the rest of the year, and we're with a positive outlook. Peter. And
just to point out, in this particular slide, the photo that's the facility in Baie-Comeau that we took over recently. So that's now an Argo facility. In terms of just summarizing a little bit more this year and some of the events that have taken place beyond what Alex has already said, and then looking forward to the second half of this year and next year. So obviously we've done a couple different equity raises, one in January, one in March. We've taken over the Quebec facilities and have now inherited those teams and have made them Argo employees and are getting them integrated into our systems, and that's gone really well. We've begun the planning and the build out of the 200 megawatt data center in Texas, and I'll give a further update on that in a minute. We've made some diversification investments into DeFi, Web 3.0 with Pluto, with WonderFi, with Luxor, and we've built and are continuing to build relationships with ASIC developers, including Epic, and we have some machines from them coming in the second half of this year. In terms of the second half of this year, so the focus for Argo is to obviously continue to build out our ESG initiatives. That's been a real differentiator for us, and has been very well received from shareholders, by the public, from the media, There's been lots of traction to the work that we've done, and the key focus being their work. We actually have done a lot of work, and I'll talk about that in a minute. Terra Pool is going to launch in the second half of this year, and then our climate strategy, our climate action plan is going to also be launched with the goal or the intention to be the first cryptocurrency miner to reach net zero emissions. And then lastly, the delivery of Bitmain S19s and Epic machines in September, October for the S9 for the Bitmain machines, and then a little bit later than that for the Epic in Q4 for the Epic machines. In 2022 and beyond, with our current orders, and that should be this year in 2021, we'll get to 1.7 exahash. The mining operations are obviously going to continue to expand because we're building the infrastructure to fill it out. The goal right now is for Texas to reach 100 megawatts in the first half of 2022 and to be 200 megawatts by the second half of 2022. And that's we'll talk about China in a minute because that's obviously an important factor into the way in which the overall kind of ecosystem is looking right now. So in terms of China's crackdown on mining that I'm sure everyone's heard about over the last 2 months, there's been really an enormous a sea change in the way in which the global mining world has looked. And if you look at the chart here, which anyone can find online on I think this one's from btc.com. This is the global hash rate. So this is the horsepower of all the mining machines in the world that are being pointed at the Bitcoin network. And you can see over the last 60 days, this is the last 180 days, but in the last 60 days in particular, there's been some significant drops. There was a drop about 2 months ago when a number of machines came off online because of an accident at a coal a power plant, and machines came off. Then those machines came back online, and we were up around 180 terahashes a second. And then since then, China has cracked down, and almost 50% of the overall global hash rate has come offline. So what does that mean for us? It's a really significant effect in two ways. In the first way, it means that mining difficulty has decreased or is continuing to decrease. So it means, and I don't want to get too technical here, but I think a lot of you are familiar with mining difficulty and its effect on profitability for miners. It essentially means that Argo, for the month of June, let's not talk about Argo. Let's just talk about miners in general. Given where difficulty is, miners in June will mine 6% more because difficulty takes a couple weeks to catch up to, depending on the hash rate, because it adjusts every 2 weeks. So mining in June will be 6%. You'll get 6% more Bitcoin than May, and mining in July, which because the next difficulty adjustment is going to happen in about 6 or 7 days, mining in July, you'll get 25% more Bitcoin for the same amount of hash power that you will from June. So it means that over the course of 2 months, miners will get 30% or more Bitcoin for the same amount of hash power, which is obviously very significant for miners like Argo, who are not in China, who are running our operations in the same way. So that's the first effect, is there's a short-term effect on mining profitability and just pure Bitcoin coming into your coffers. Obviously, depending on what happens to the price of Bitcoin, et cetera, et cetera. The second effect is that there's now a huge group of Chinese miners that have invested billions of dollars in machines that are looking for somewhere to put those machines. So they're looking to Russia, they're looking to Kazakhstan, and most importantly for us, they're looking to North America. They like North America because there's regions where, like Quebec, like Texas, where there's pro-Bitcoin, either local governments or state governments. There's low cost of power, there's renewable. The Chinese are very aware that the future of mining is renewable and the future of mining is immersion. And so they're looking for those type of opportunities. And what does that mean? It means that power in North America and access to facilities in North America has just gotten extremely much more valuable. And so that's an opportunity for folks who are in North America who already have facilities locked up, who are building facilities, to look for opportunities to partner with Chinese miners. And people have been talking publicly about. There's no surprise that those conversations are happening. So that's a really significant. And I don't want to spend too much on this slide because I do want to get to questions, but it's a really significant development that has happened in the last couple of weeks. So go on to Helios and our project in Texas. 160 acres next to a strategic substation. The substation has 5.5 gigawatts that it's putting out. We've done the interconnection for 800 megawatts coming out of that substation. Power purchase agreements are estimated to be somewhere in the $2. Sorry, this should say 2 cents, not $2 per kilowatt hour. And I've given the timelines already, but we're looking at having the completion of phase 1 built in the first half of 2022. And as we've already said, we're going to be using immersion technology for efficient cooling, not just because Texas is hot in the summers, which it is, but also because that's the future of mining. It gives you more opportunities to overclock the machines. It gives you more opportunities to take that heat that's coming out of the machines and use it for other applications. And so it's definitely, it's not just us. There's lots of other folks looking in immersion, but Perry's come up with some really great designs and some really great systems. So what have we done? We've got the interconnection obviously signed. We've purchased we've purchased the transformers from Pennsylvania Transformer Technology. And those are being manufactured in the U.S. and will be delivered or are predicted to be delivered in February of 2022. We've also signed a contract with Sabre Power to develop high voltage and medium voltage substation. On our site next to the other substation. You need to kind of go from their substation to your substation and then to medium voltage and onwards. And construction in terms of moving earth around and those type of things is happening in the first week, or is expected to begin in the first week of July. So that's Texas. I'll blast through these next slides a bit quicker because many of you are already up to speed on these other pieces, and I do want to get into questions. So climate action plan, progress has been good so far in the last few months. The goal is to have it out in the next couple of weeks. Been working very closely with Guidehouse to finalize the pieces. It'll involve a full action roadmap and time frame, a baseline study of 2020 and 2021 emissions, which is complete, and then looking to build key partnerships with sustainability organizations. So again, that's a differentiator for us. Lots of people are talking about ESG right now. We used to talk a lot about ESG, say we're mining in Quebec, that's great. And it's important to talk about it, but it's also important to do things about it. And so we've done we're doing the climate action plan. We signed the crypto climate accord, which we didn't just sign it, we also influenced it. We had a big impact on, the tweaking of it to have these objectives kind of a little more solid. And we were the first official signatories of the accord and made this public commitment to get to net zero by 2030. So, we're projected to way overachieve on that, but it was something that we felt was important to kind of put a line down and have it out there. We also announced the creation of Terra Pool, which is the world's first Bitcoin mining pool powered by clean energy. It's anticipated to launch in the second half of this year. And it's an opportunity for us to, again, be at the forefront of ESG leadership and also to look for opportunities to leverage that on the business side. And we're working with DMG on it, and that's been going well. We also are a founding member of the Bitcoin Mining Council, along with Michael Saylor and some of the other publicly traded miners in North America. It's been a really productive organization, and it's an open organization. It's voluntary. So it's open to any Bitcoin miners. Mandate is to promote transparency, share best practices, and educate the public on Bitcoin mining. And on the transparency piece, going back to what's just happened in China, the talk about ESG and mining, there's still a lack of solid information out in the world about the Bitcoin network and how much of it's in different regions, and how much of it is from sustainable power and how much of it's not. So the goal is to have this collaborative group that is all independent, that is decentralized, that is committed to Bitcoin, and all of the good things we love about Bitcoin, but also kind of making sure that we're organized, because it certainly feels like oftentimes people who the opponents of Bitcoin are organized, or at least are pushing these certain narratives which are not always based in solid fact. And then again, another thing that is a differentiator for Argo that we've tried to continue to build on in 2020 and 2021 is investments outside of traditional mining. If you think about digital infrastructure versus physical infrastructure, our physical infrastructure is solid. We're mining. We're anchoring the Bitcoin network through our proof of work miners. At the same time, there's this whole other ecosystem and this whole other world, and we've taken some significant steps into it. Pluto, obviously being the biggest one. We've also done WonderFi. We've also done a small investment in Luxor, and those are all to bolster again, this complementary, the yin and the yang, as it were, of cryptocurrency infrastructure as a whole. So it's an important part of what we're doing, and it's I would expect that it will continue to grow as we grow, both internally and externally for Argo. Yeah, we're excited about those different investments. So that's the presentation. I talked about smart growth, talked about Texas, I talked about ESG, talked about investments outside of just traditional mining or prop mining, as it's called. And now we'll get into the questions.
Thank you very much indeed. What I thought, I'd just give you a couple of moments just to grab your breath. And I know we've got Alex and Ian also. But ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after this presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Peter, I know you received a number of questions from investors ahead of today's AGM, and I know you've got a load there that you're going to read through. When it comes to the live Q&A, if I could just ask you, where it's appropriate, if you could also read out the question, just because obviously they're not visible to other shareholders and investors on the call, and then I'll pick up from you if I may at the end, sir.
Excellent. Okay, thanks, Mark. And I do want to hop right into the questions because we've got half an hour, and hopefully we can cover a lot of ground. So, yeah, folks sent in a lot of different questions ahead of time. We've kind of curated them into themes and chosen about a dozen of them. So we'll cover those, and then we'll go into the Q&A questions that are coming through on the Q&A section of this platform. So first question from Chris Ware, and I don't have all the names of the questioners. Some of them kind of came in anonymously. A great year so far. Thanks for all the hard work. My question is, given the stated aim of building a blockchain technology company, not just a miner, can you provide any insight into the long-term vision for Argo? I.e., do you see Argo growing to have multiple complementary but different areas of the business, such as mining, Pluto, NFTs, green energy provisions, and other blockchain ops regarding, for example, DeFi? So thanks for the question, Chris. So the short answer is exactly what I just said. The vision for the company as a blockchain technology company is these two sides of the business: the physical infrastructure side of the business and the digital infrastructure side of the business. Obviously, the physical infrastructure business is the backbone of our revenue right now. Is a major part of what we do on a daily basis. But the digital infrastructure side is growing. It's growing in importance in the network, in the cryptocurrency ecosystem, and is growing in importance for us. So it's really a balance of those two, and looking at opportunities in those two spaces and assessing them on a month by month, quarter by quarter basis. As you can see in our in the year so far, it's been a balance. It's been both. It's been building mining infrastructure and also building that digital infrastructure. So that's the vision for the technology. For the company. And that's where we're going. I think that's different from a lot of other publicly traded miners that only, for example, mine straight Bitcoin and are only focused on Bitcoin. We don't just mine Bitcoin. We mine, altcoins if we think there's a good ROI opportunity. And then we also have this other digital infrastructure side. So so that's the vision is to kind of play in those two worlds and to make sure that we're growing effectively in those two spaces. Could we receive an update on the status of the Pluto Digital Assets IPO from Rupa? Pluto Digital Assets is now just called Pluto Digital, and obviously we're a major investor. We're the largest shareholder in Pluto. We have a close relationship with them. We speak to them every week. We have a weekly call, and we do an update. I spoke to them just on Wednesday. Sorry if you hear my kids. I'm working from home. Let me just mute for a minute and tell them to not make. Sorry, my apologies. Teenagers. So Pluto, in terms of the timing of their IPO, that's a question for them. I can't comment on exactly what they're thinking around the I don't want to speak for them, but we're confident in the direction of what they've been doing and where they're going, and feel like they've been great partners for us, and we're happy to be the largest shareholder. Next question. Argo is already profitable and has been for the last 18 months or so. Are you declaring any dividends for shareholders? So on the dividend front, it's the answer, and I don't know who asked this question, but the answer is basically the same that we've always said, which is the focus right now for Argo is growth. We're a young company, we're a technology company. We feel like the best way to get return for shareholders is to take any profits from the company and put them back into the company. So we don't have any plans for a dividend in the foreseeable future, but we're always looking for ways to return value to shareholders. Next question, and Alex gets a question. Please, could the board confirm what they plan to do with the cancellation of the share premium account?
So I think firstly, why did we cancel the share premium account? So there are certain share accounts which are distributable and certain ones which you can't distribute. So it's a part of housekeeping really that many companies do, which is cancel that share premium, reallocate it into a reserve which you can distribute from. And you have to go through a process which was put in place in order to protect mainly suppliers of that company. Historically, some companies had been bad actors really in this space, had stripped out all the cash and left the suppliers high and dry. So there's a process you need to go through to make sure that isn't the process. And of course, that's not what we're trying to achieve at all. And what that means is that we are able to distribute that amount. Now, as Peter has just said, are we declaring dividends, etc.? I refer to his response. At the moment we are not considering that. We think there's better use for funds. So that is the cancellation of the share premium and what we intend to do going forward.
Okay, thanks, Alex. Next question. Is the board considering a buyback of shares with money generated from cancellation of share premium? You kind of just answered that, but
yeah, I mean, just to clarify, it doesn't generate money when we cancel the share premium. There's no money generated by doing that. It's purely a sort of accounting exercise. And yeah, again, with a buyback of shares, again, we believe that the capital can be better employed with maximizing shareholder value through growing our machines or whatever the decisions that we do that we make in the running of the business.
All right. Thanks, Alex. Next question. What is the current status of Q4 Epic deliveries? So Epic, we have a close relationship with them. I think some of you might have seen the interview that I just did with Henry Kwan, one of the Epic founders, that we posted on social media. We're quite pleased with the progress that they've reported to us. Those guys are kind of on top of their game in terms of what they're building out. From all reports that we hear, that they're on time for Q4. So those machines are going to be, in the grand scheme of things, it's a great relationship, but it's not a huge portion of our overall fleet. So it's an innovative young company, and we're looking forward to grow with them. But it's not obviously the only increase in hash rate that we have coming. So that's epic. Next question. It's important for me to what motivates you in making Argo work. I know I've emailed you in the past regarding your quote behind your wall. In the same, it would be great to know how you continuously push each day for harder, faster, and stronger results. This will show how different we are from the rest. Okay, thanks for the question. So for me, it's really about trying to make Argo, trying to take Argo to the next level always. So when I started, a year and a half ago as CEO, we were in a certain place. I feel like we're in another place now, and I feel like we can continue to get to the next place, which is, I think we're a medium-sized miner now, a medium-sized player. I think we can be a really large player in this space, and a significant player in this space moving forward. And we have to do that in an intelligent way. In terms of what motivates me personally to work as hard as I do, or to kind of, achieve, I always think back to an interview I saw with Tom Hanks, 10 years ago, where someone basically asked the same question to Tom Hanks. They're like, what motivates you, Tom, to do? And he said, I want to make good soup. And that resonated with me. There's something about, making good soup, about putting the work in to do things of quality that resonates with me. I mean, there's lots of people in this space who are in it for various reasons, whatever reasons they're in it for. But for me, and I think for our team, it's really about making good soup, about achieving as much as we can with what we've been given. And we've got a great opportunity, I think we can capitalize on it. So thanks for the question. Hope that I answered it. I noticed some activity on hiring and bringing more people into the Argo team since mid-April. What's the progress on that? Did all the positions get filled? So we have been growing. Obviously, Argo took over the facilities in Quebec, and we inherited, the team there. Not a huge amount of people, less than 10. But that data center acquisition, almost doubled our kind of workforce overnight. Maybe Alex, can you just mute? I think we're picking up a little bit of sound on your mic. And so that's obviously been an important, staff, or an increase in staff for us. And then along those lines, we've added some more administrative type people in Canada to help kind of support the data centers. It's, we're a lean, versatile team. It's important for us to stay lean, but we also need to make certain strategic hires. We have added as well a compliance officer to make sure that our processes and systems are built in an effective way. And so she's joined the team, and that's been great. And then as we grow and we add more, hires of certain levels, we'll announce those through RNS. But I'm really happy with the team right now, and happy with the talent that we've added in the last in the last couple of months. It's getting to be a more competitive talent environment for sure in the crypto space. You see people moving from the data center world. You see people moving from the finance world. People that wouldn't, don't necessarily think of themselves as startup people, but or even crypto people. They now see this industry growing really fast, and they want to be part of it. So that's interesting, and especially as we build in Texas and build out Texas, there's going to be some recruitment. I don't want to say challenges, but there's going to be, it's going to be important for us to get the right people on the ground to make sure that we can scale the way we want to scale. And so HR is way more important than it was a year ago for us to have the team and have the horses in the stable. And that's why you've seen, those kind of announcements going out. Next question. Dear Peter and Ian, can you outline Argo's plan over the next 18 months with regards to its BTC HODL? More specifically, have you considered selling at the top and then buying the dip once BTC is in a full bear market? It makes no sense to watch Argo's assets appreciate by a factor of 3 to 5, only to watch them evaporate again and have the company still valued at $500 million in 24 months' time. So on the BTC HODL, what we are trying to do is to hold an appreciating asset as much as we can, while protecting, the downside risk, and to make sure we have enough cash in our treasury, on our balance sheet to cover our operating costs. We're not traders. We don't try to trade. We don't try to time the market. We believe that over time, in quarters and years, Bitcoin is going to continue to appreciate, and we want to hold it. So that's really the strategy. So, we once in a while, if there's a huge dip or whatever, like we did in earlier this year, we might buy some Bitcoin if we're overweighted on the cash side. But for the most part, we have been fairly consistent in our messaging around this, which is to hold Bitcoin as an appreciating asset and to not try to get into the trading game, because we don't look at ourselves as traders. That's not who we are. Next question. I understand you're increasing revenue, but that it is tied to the value of Bitcoin. Sorry, this sentence is a bit strange. I understand you're increasing revenue, but that it is tied to the value of the Bitcoin and Zcash you hold. What about your operational cash flow? Where do you get cash on hand to pay for daily operations, pay bills, pay salaries, etc.? If you only plan to hold your cryptocurrencies, does your cash flow mainly consist of financing cash flow, including stock offerings? So the answer to this question is, it's a fair question. It's like, okay, so where are you getting the cash to pay for your operating costs? And people ask this question all the time. There's essentially 3 ways to for the business to pay for our operating costs. One is to sell Bitcoin, and that's what we did in 2020, and that is a viable option, under certain circumstances. The second is to raise debt, and to get debt. And Argo's done that historically. We've got debt against. We have a mortgage with our facilities now in Quebec. We did a lending deal with Celsius, or Celsius lent us. We did a leasing deal with machines. We could also leverage Bitcoin potentially, or borrow against Bitcoin, which other miners have done. So debt is another option. And then the last is to raise equity. So those are the 3 options. We've done some equity raising when we think there's an opportunity, when there's a responsible, clear use of those funds, and the market supports it, and the timing is right. That's an option. So those are the 3 options: raise equity, raise debt, and sell Bitcoin. So far this year in 2021, we've raised some equity, we've raised some debt essentially through the mortgage, and I guess the deal with Celsius was end of 2020, but that's another one. And we haven't sold any Bitcoin. 2020, it was the opposite. We sold Bitcoin. We didn't raise any debt really, and we didn't raise any equity. So we're always looking at those 3 options. The goal for us as a cryptocurrency mining company is to have cryptocurrency, and have it in treasury and hold it. So we think that whichever way at any particular moment is whichever of those 3 options is the best one, we'll lean into. Alex, do you want to add any more to that one?
No, I think it's just about, it's not debt at any cost. It's, we will consider each of the options on their own merits at the appropriate time. We don't lean towards one or the other. It's whatever makes sense at the time.
Okay. Okay, a couple more questions here, and then we'll jump in because we've only got 15 minutes left. When I first started following Argo, you had a niche. You prioritized green energy from day one, and to me, that was your edge. Now that your energy consumption has been exposed, everyone is going green, or at least claims to be. In which case you no longer have that edge. So what sets you apart from all of the other miners? Fair question. I think one, on the ESG front, yeah, there's lots of folks who are talking about ESG. We actually are doing ESG. So when we talk to institutions, when we talk to funds, when we talk to whoever, people are always impressed with the actual work that we've done and the relationships that we've built. So yes, lots of people doing ESG or talking about ESG. We're actually doing ESG, one. Two, I think what sets us apart is our team. Our team has been together now, our core team has been together for 3.5 years. We've weathered a lot of storms. We know the market really well. We have executed on everything we've ever said we're gonna execute on. We have a good reputation in the space. Perry's a genius and really has some incredibly innovative ideas. And if we can put him, he's like a race car. If we put him on the right track in the right direction, there's nothing that's gonna stop that guy. So team is important for a big part. And then I think our smart growth mentality is also a differentiator, looking at ROI, not just size over anything, trying to time things right. I think that's a key piece. And then lastly, I would say, the investments we've made in the ecosystem in general is, again, a differentiator. There's not that many other Bitcoin miners that are starting to play in that other space, in that other world, in the digital infrastructure world. And that sets us apart, that makes us different. Please discuss in great detail the current and future power sources of West Texas. So Texas is obviously a special part of the world. It's this place where there's a ton of renewable power that's come online in the last 5 years. There's something like 5 gigawatts of renewables that have come online in West Texas. There's another 13 gigawatts that are slated to be built out. There's a transmission problem. There's not enough transmission to get all of that power to bigger centers. It can't go into the national grid because Texas is off of that. So they need reliable load at a local level to build off of, to take that power. In order to take that power, you can sign these power purchase agreements that allow you to kind of act as this accordion where you're using the power, 98% of the time, and 1 or 2% of the time you shut down for a period of hours and give power back to the grid. And because of that, you're able to get really low cost power, like really low cost power. So that's an important distinction. It's different from really any other market. That's why you see so many miners going there. We're kind of ahead of the game from a lot of people because we've already got the interconnection agreement signed. We've already got the location. We're already building it out. So that's exciting. And then the other thing that's happening in Texas, which is cool, is that it's not just power coming onto the grid that's happening, but there's also behind the meter power that's off grid that folks are reaching out to miners and saying, are you interested in making a PPA directly with us? So there's an opportunity to have this hybrid model where you also have on grid and off grid. So that's kind of what makes Texas special, and that's why you see many folks moving there. And when we add into that the fact that immersion mining is coming out and can deal with 95, 100 degree Fahrenheit or 35 degree Celsius summers, which wasn't the case 2 years ago. That would have just been too hard to cool your machines. That's why you see a huge development in Texas. And last question: has there been any contingency being allowed in Texas for a complete power outage? I.e., whether it be a diesel backup or has battery storage been considered to maintain power to prevent the complete loss of hash rate? So miners pretty much across the board do not have redundancy power systems like a traditional data center was. It's just they're not built out that way. It's too much. It's too high a cost for miners. So there's pretty much no one in the world that's a cryptocurrency miner that has a backup system. The great thing about Texas is, for instance, during the last big power outage, if you were a miner, and it's hard to say it's a great thing because there's lots of people that were without power, but you could actually shut down voluntarily, give that power back to the grid, and then get financial reward for it, and basically get a credit or get really low power costs depending on your PPA. So it's power outages are not a good thing for cryptocurrency miners, but they can actually be financially beneficial if you've structured your power purchase agreement the correct way, especially in Texas. So on that. Okay, I'm going to jump into some questions that in the Q&A. Peter, thanks for the presentation. Your glasses seem pretty futuristic, but they seem quite reflective. It's true. I really should get some non-reflective glasses. I did think about that the other day. I really like the Terra idea and your work with Energy Web. have you considered buying cheap miners from China because of the latest crackdown in case Epic has delays or teething issues with their new machines? Also wanted to ask, what are we doing to diversify away from being just a Bitcoin miner? If China can crack down on their miners, what stops America doing the same with us? Also, if Bitcoin prices do go down significantly, do we have a plan to navigate? Okay, so there's like, do we have a plan to navigate through this? So there's like 5 questions in there, but I'll kind of divide them out. So cheap miners from China, it's all about timing and about capital, and obviously, you know, there's opportunities right now to expand with miners. I mean, it's just really interesting how this space works. You either have, you know, 3 months ago, there was lots of power to be had, lots of, you know, maybe not lots, but there was power to be had. It wasn't that scarce, but miners were really expensive. They were like $100 a terahash. Now, you know, miner price per terahash has gone way down comparatively. And, you know, the scarcity is now finding power. So as a cryptocurrency miner, you need to take advantage of that, and you need to, you know, buy low, sell high, so you want to try to buy machines. You want to try to time the market as much as you can. So I can't get into any more details than that, but yeah, it is an interesting time for sure. If China can crack down on their miners, what stops America doing the same with us? I think you need to be in the right jurisdictions. Texas has clearly signaled to the cryptocurrency market that they're open for business. The governor just signed, you know, a bill. We're members of the Texas Blockchain Council, which is you know, working together to solidify blockchain in the state. So lots of good things happening in Texas, and I don't think that's going to, you know, there's going to be a crackdown there anytime soon. In Quebec, we're in Baie-Comeau, for instance. The municipality is very supportive. The mayor is very supportive. So I think it's about building relationships with local and state governments and making sure that that you're, you know, taking advantage of the opportunities in those particular places. And I think that's happening in Texas. Next question, when does Bitcoin Mining Council plan on having another meeting, especially in light of China's recent ban on all crypto mining? The first one definitely could have used your input. Yeah, that was really unfortunate. I was bummed that I couldn't get on that call. It was just, I guess Twitter Spaces just got overwhelmed, and I would have liked to have obviously shared what I had to say, but it is what it is. We don't have a date yet for the next Bitcoin Mining Council meeting, but the goal is to have them, you know, fairly frequently. So I'll talk with the group, and we'll see. Thanks for the input that you'd like another one. Any details on the Bitmain replacement order? They're scheduled to come as announced in September, October. No, we haven't heard anything otherwise. So we're in touch with Core every week or every day in many cases, and from everything we've heard, those are on time. 160 acres versus 320 acres. Yeah, so there's some confusion about that. The initial RNS from March stated 320 acres. There is 320 acres of land there. We have 160 acres with an option for another 160. So that's the differentiation there. So, you know, the legal folks have said we should say 160 because that's what we have purchased. We can't include the option yet. How do you balance the smart growth mentality with the increase in available machines? Do you predict an arms race amongst North American miners with the new availability? I think what you're trying to say here is there an arms race, like with all of these machines, is there going to be an arms race amongst I see. Yeah, again, it's looking at ROI, it's looking at availability, it's looking at what, you know, what you can realistically pull off. I think for us, it's important for us, you know, to commit to things that we know we can achieve. And if we think that there's going to be, you know, if we think we can build out 200 megawatts or 400 megawatts or whatever it is on a certain timeline, and then we need to commit to that and do that. So I think your eyes, you don't want to have your eyes, you know, bigger than your stomach in this particular case. And so we've got to just make sure that our growth is smart and that we balance it against, you know, overly committing. But at the same time, there's some really interesting opportunities right now. Will there be an arms race amongst North American miners? I mean, there already is. I mean, people are already trying to grow as fast as they can and to add as much capacity as they can. So I don't think anything's changed other than, you know, the structure of has now, instead of being an arms race for machines, it's about power and this kind of balance between power and machines. All right. Let me just see what's next. Do you have concerns regarding recent power supply issues seen in Texas, both when weather is hotter or colder than average? No, I think I pretty much answered that. I think, you know, we have this ability to kind of be this accordion and to load shed depending on you know, conditions. So I don't have concerns about power supply issues in Texas. Alex, any other questions that you're seeing out there?
Yeah, there's a question that's come in a couple of times which I'd like to address, and that's regarding the authority to allot 2/3 of the share capital of the company under Resolution 5 and Resolution 6 as well. So what we've done is we've gone and looked at the guidance from the institutional shareholder guidance from the IVIS and the ISS, and they've suggested that 2/3 is an appropriate amount to ask for. And so that's what we've put forward. It gives us an increased flexibility if we need it. Now, having said that, the boards, you know, we only have the freedom on allotting these shares without first offering them to current shareholders. And under limited circumstances, there are other ways we could do that. There are other ways we can allot those shares. But they're in limited means, such as through some sort of issue of consideration shares, so using that paper to buy paper. That being said, we do not currently have any plans to do either, but the larger authority obviously just gives us that additional flexibility. And on to Resolution 6. So that's continuing from last year, gives us the ability to allot shares without the preemption rights, which has remained at 10%. However, just on a practical note, we would need to go to the LSE, given the fundraising, given the shares that we've already allotted during this year. We would have to go back to the LSE and put out a prospectus, and that is obviously a time-consuming and costly exercise, which we wouldn't do unless we felt it necessary, unless we felt that could maximise shareholder value. So, whilst we have a technical authority, you know, there are hurdles that we need to go through if we want to use them, including offering, you know, shares to current shareholders. Hopefully that gives you some idea of why we asked for that. And we will only do it if, you know, if there's an opportunity to increase shareholder value.
Yeah, I think that's a good way of phrasing it, Alex. I mean, I think the gist of it is that it's not really that different from anything we've done before. There's this, you know, 10% kind of number that if we go over 10%, then things get complicated, and essentially we need to go back to shareholders. So I understand there's been some questions about it this morning, but I don't think shareholders should worry that, you know, that this is anything out of the ordinary, or that there's anything, you know, untoward going on here. Alex, is there any color you want to add to that?
No, I think that's exactly it. There are no plans to do anything with these. It's just to put it in place should we have the opportunity that we're able to move on quickly and have that level of flexibility. Okay,
let's just go 5 minutes over here. We have a call at 12, but we'll just keep or 5. We'll just keep going for a little bit. Evan, love it, Peter. Great team, great company. No question. Just wanted you to know that this is the first stock I ever invested in. HODL. Awesome. Thank you, Evan. We covered that one. Where was one I saw here? So Joe M wrote, where do you see shareholder value coming from in the short and medium term, as sentiment is at an all-time low? In other words, why should we remain invested in Argo and not Mara or Riot, which have already started turning around and returning shareholder value? Joe, thanks for the question. I don't know how long you've been a shareholder for, but we've been through some ups and downs, Joe, over the last 3.5 years. So for sure, there's noise out there. There's lots of people who love Argo. There's lots of people who comment on Argo. That's great. We love that engagement. We love the fact that people feel passionate about the stock. And hopefully I've outlined over the course of this, call, the reasons why we're different and the reasons why, we think that our shareholders should stick with us and stick around. And we think that in quarters and years, which is the time frame we look at, we will return value to shareholders, like we've done in the last year and a half, and like what we'll do, I think, if we're able to, in the next year and a half, in the next 5 years, in the next 10 years. So anyways, I appreciate the question, but I do think that this is a volatile industry. We've had lots of ups and downs already as a company, and I've gotten used to the volatility, and I'm happy with where we are, and I think we got a great plan to get where we're going. What else is out there? When is NASDAQ? Cannot comment on that. Olu, why? Going forward, would you consider global satellite plans? So developing countries with great renewables potential can mine and not miss out on such a society leveling opportunity. Yeah, look, it's interesting. I mean, certainly there's been talk about mining in the developing world, and now with some of the climate challenges less significant. Obviously, people have been talking about mining in El Salvador. That's a potential opportunity for folks. But I think the focus is really kind of getting North America to be the leading light in cryptocurrency mining in the next few years, and then kind of work out from there. I can't imagine in the next year or two that developing world is going to become a huge mining center, but there's certainly some opportunities out there. What are your biggest challenges? Good question. Who sent that question?
Shagar S.
Okay. Thanks for the question. So what are Argo's biggest challenges? It's a good question. I think our biggest challenges are, I think we've moved away from 2020, where the biggest challenges were, making sure that we had access to capital and making sure that we had the right team in place and making sure that our growth strategy was in place. I think those things are in place. I think our biggest challenges for 2021 and 2022, which I'm confident we can achieve, is going to be execution. I mean, Texas is a big facility. 200 megawatts is not 20 megawatts. It's a large scale facility, and so we need to make sure that we are just with military precision building out that facility, and making sure that we do what we say we're going to do. I think the regulatory pieces will take care of themselves. I think all of the other sides of the business, I'm confident we can get to. But I feel like we've got the horses in the stable right now. We've got an incredible team. It's really about execution for the second half of this year and for 2022. I think it's a good question though. All right. Any other questions, Alex?
I think we've covered the majority, Peter.
Peter, may I suggest, it seems for every question that you answer, there's another 2 or 3 that pop in. So I think we could consume you for perhaps the rest of today. So what we'll do is we'll make all the questions available to you afterwards. And of course, if there's any there that you feel that perhaps you would like to have addressed, but we didn't have the time to, we can always put a response, and we'll send that out to all the attendees and followers of the company on the platform anyway. So in light of that, perhaps, Peter, I could just hand back to you just for a few closing comments. And then what we'll do, I know investor feedback is important to you, and we will redirect investors to provide you with their thoughts and expectations.
All right, perfect. Thank you, Mark. So my closing thoughts are thanks everyone for being part of this AGM Q&A and for being investors in Argo. I think on the poll, I think it was 96% of the folks who responded said they were shareholders. So clearly this is a true shareholder meeting, which is great. And I in 2020 I used to say that I was cautiously optimistic for the future, and I think in 2021, when we think about the things that we have in store, we're optimistic for where we're going. We've had a great start to the year. Everything we've announced so far has been a real positive for the business, and and I'm excited on where we're going. Alex and Ian, do you want to add anything?
No, I think you've summed it up perfectly.
I would agree with that. That was great.
Well, on that basis, thank you to both Peter, Alex, and Ian for updating investors and shareholders this afternoon. Could I please ask investors not to close this session, as you will now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly appreciated by the company. So on behalf of the management team of Argo Blockchain, I'd like to thank you very much for attending this afternoon's presentation. That now concludes today's session, and good afternoon to you all.